today. Let's get some good questions going.
All right. Nah, me and Kate ain't even around each other. Edward, you can go ahead and ask your question.
Yes, thanks for taking my call. I wanted to know what would you recommend in regards to like a stop loss? Will like I was thinking like maybe 1% stop loss on the entry. What would be your recommendation?
Definitely not 1%. You're gonna get stopped out a lot. Stocks don't go straight up. They don't go straight down. They kind of, have peaks and valleys in them. So your stop loss is going to be based upon like what your risk tolerance is and what your account size is. You have to kind of see how much money you're playing with, and then you have to determine like on that particular trade how much you're willing to lose on that trade, and whatever that percentage is what you kind of you want to stick to. And you can have a stop loss that's the same across the board for every trade you enter, or if you don't enter too many contracts at one time, which is what I recommend, that you kind of keep your positions small. But if you're just doing maybe one trade at a time, maybe you say, okay, I'm trading $500 into this particular contract. I'm not prepared to lose more than 10 to 20% of that, and then kind of set your stop loss accordingly. What you got, Ray?
Yeah, because
I,
I generally do like maybe roughly like 20 contracts. So I was thinking, depending on the volatility of the stock too. So if you're going to high volatility stock, maybe you want to make sure that it doesn't go against you. But you saying like temp, so it all depends on. I trade one stock at a time. I don't usually do multiple.
I would say probably try
Yeah,
like 20,
20.
30%.
Okay. Okay. All right. Sounds good. Thank you.
You're welcome.
no problem.
Um, Miguel, you can go ahead and ask your question. Yeah.
Hey, how you doing, man? How y'all doing today?
All right, how are you?
Good, good, good. I'm brand new, man. So I'm not like what would you guys recommend just as far as a newcomer to stocks? Like what would you probably say? I mean, I know most of you guys are gonna say, as far as the money or starting off money wise, but what do you recommend would be some tools or something to kind of like, get started? Because I'm still kind of like shaky on doing it. So just brand new to the whole stock market thing, man. Honestly.
Welcome. Happy to have you getting
Thank
started.
you.
So, um, I want to know, do you know the fundamentals? Like, do you know what the expiration dates mean, and do you know about premiums and strike prices and things of that nature? Because if you're not, then I highly recommend having some fundamental um you know training, whether you're doing the free stuff that we offer, or you're doing one of the courses and provider resources. But if you can learn the fundamentals, I personally would say, if you want to go ahead and jump in and get started, that you can learn the strat. And Ray has a lot of phenomenal information out there on the strat, but I do think that you need to know the fundamentals of like how options go before any of that.
Hold on. You got that, Miguel?
And thank you, man. Thank you. And Ray, I was gonna ask. So I looked on that resource, talking about the page, and I was able to locate that video. Most of your information to be in that same group, correct?
Oh, you talking about what Kay was just talking about? Or you talking about before?
Before and also what Kay was talking about.
Oh yeah. So let me share screen to you. All right. So what you're talking about, it would be right here. So for the people
Got you.
that's looking for research admins here, uh,
Got you.
for learning the strat, strat resources and tutorials, you can click there. It's a bunch of videos. And then the main thing that you'll need is to click on here. Um, and like so for the people who use TOS, um, if they want to import it into TOS, click on that link for the strat scanners, boom. And then for like the trading view, time frame continuity for the numbered candles, candle type, and then the lingo, what the strat is, and then the main thing, the strat combo. So all that is in the strat resources Google Doc. That's in Market Facts resources. Once you click on strat tutorial, scroll down to the strat resource doc, as well as Kay created a cheat sheet. So check hers out as well. And she goes
Okay.
over it. So boom.
Oh man, thank you. I appreciate that.
No problem. Danae, hey, what's your
Hey,
question?
Hi, Danae.
Hi. Happy Sunday.
Happy Sunday.
So, quick question. As far as the ATR, sorry, I was just eating a salad. As far as having that on TradingView, how does that help you maneuver through the day when you have the ATR as an indicator?
So with the average true range, the way that you can use it is going to be basically contingent upon the time frame that you're looking at, right? Ray, you got it pulled up. You got the ATR pulled up.
Yeah, I'm about to pull it up now.
Okay. So one cool thing about the average true range is that it's going to give you the average true range if you're looking at the daily chart. It's going to give it to you if you're looking at the weekly chart, the monthly chart, and it's basically going to show you how much that particular stock has moved per month, given that particular time frame that you're looking at. So Ray, if you let me move this chat out the way. 1 second. So as he's hovering over it, it's not gonna show Ray unless you do the drop down on it, because I can't see the dollar range changing on your ATR.
You can't?
I can't see it. Can you see it?
No, I see the dollar out to the side. Like when I would scroll up and down, it's saying like $2, $3, blah, blah, blah.
But hover over the candle.
Hover.
Hover
Oh,
over the candle, because it's supposed to show you down at the bottom, like the ATR. Let me see if I can share my screen. Hold on 1 second.
Okay. It feel better, Kay. I hear it in your voice.
I'm getting better. I sounded like a little boy the other day.
Progress.
They was making a lot of fun of me. Very bad for me.
Oh my God.
I'm getting some stuff pulled up over here.
Okay.
But the cool thing about the average true range is that PDD crossing horizontal right. Okay, 1 second.
Okay.
I forgot where I was. Mother scruncher, where did it go? Ray, I wish your thing was working, because okay, there we go. Now we're in business. Share. Not really tech savvy. Can y'all see my screen?
Yes.
All right, cool. All right, so Ray, do you see what I'm talking about now? Let's see, PDD. I got another alert on that. But can you see over here the bottom left, Ray, where as I hover over the candle, it'll tell me the ATR at the bottom left.
yeah.
On the chart, right? So moving from candle to candle, it shows you over a day's time frame. Like this stock, if I were to just hover from candle to candle, what in my head I would say to myself is, wow, this particular stock can move, anywhere from about $9 to $11 in a day.
Oh, okay, got it.
And so with that being the case, you can I like to average down in all cases, you know what I'm saying, just to play it on the safe side. So if it can move $9 to $11, I'm gonna say maybe I'll choose a strike price that's like $8. I might say $8 in a day. And if I'm choosing to hold it for like a week, and a support level is at like, I don't know, $222, and then the resistance is at $230, I might say it can take a day for it to hit 230. You see what I'm saying? So that's how I utilize the average true range. And then obviously, like this is the range over a day's time. But let's say if I want to maybe hold for a month or more, it'll tell me this stock is capable of moving, $34, $38, $33. So I might say, well, it's good for $30 at least. You know what I mean?
Okay, got it.
That's how you use it. Or that's one way to use it. I'm sure there's, a lot of different things that more experienced traders have done with that. But that's one way that I know that you can use it.
Perfect. Thank you. And what about the RVOL in the middle of your screen? Because I be seeing that sometimes.
The relative volume, it's just basically showing you how the stock is performing or how it's exceeding its average. You know what I mean? So this is basically showing you like how much it moves, on average. But obviously, if this were to break above this line, then like for example, I think this green candle over here does it. It's just showing you like there's an increase in volume, like it's really picking up volume.
Got it. Oh, that's a good one. Okay.
Yeah.
Yeah, I want to use that one.
Mm-hmm.
Thank you. Thank you so much.
Welcome today.
Oh, Drew, it was at the bottom, beside the ATR 14 RMA. But Hassan, what's your question, bro?
What's good, Ray? Hey, Kay. Hope you guys feel better, first of all.
Thank you.
I'm gonna try and make this real quick. I had just finished watching one of Sarah the Strat Snipers videos, right? And she was talking about how basically she was showing like Roku, I think Peloton, and I think DoorDash, and how
Yep.
they were doing a 1-2-2, I think rev strat, I think it was.
1-2-2
And-
rev strat.
Right.
Week,
So she was
the month, I think.
on the month, yeah. So she was talking about how when it triggers on the month, sometimes you could wait for corrective activity. Like you don't have to necessarily jump right into the trade, wait for corrective activity, and then jump into the trade, right? And that was kind of the first time I heard that. It's like, because usually I'm thinking like once it triggers, you jump in and wait for it to hit your target. So is that something that you recommend, I guess, as well in terms of waiting? Because I know sometimes, like she showed, I think on DoorDash, it doesn't always have the corrective activity. It could just take off. So is that something that you just look at trade to trade, or?
It's going to be for me, because I understand and I think that's probably why I like. Okay, I'm finna take you off my screen.
All right, but thank you. I don't even know it's still up.
But so you don't always have to wait, right? That was for
Okay.
the monthly trigger. So that's a bigger
Okay.
trigger. So sometimes there is going to go ahead and be the pullback. So for instance, I could show you an example of that. Let me clear the stuff on my chart before I share. All right, boom. So now go back here, screen share. Boom. All right, so you see what crowd, right?
Yep.
Crowd had that 1-2-2, the same thing. I was never paying attention to it. So crowd did the same thing, right? And so if you go down to the weekly, this is where, from Trade Ideas 515, you see me originally take it from here and go back up. That original TTO was right here that she was talking about, that corrective activity before coming back up here and then triggering.
Okay.
But at the same time, it did that pullback on that initial weekly trigger, right? So if I go down to the daily and I go back to here, the weekly trigger was right here, but it had an inside. So not the exact weekly trigger, but actually it was the weekly trigger. So it did it twice. It triggered the 2-1-2 and pulled back on the day, right?
Okay.
On the daily trigger. And then the next day it went 2 up. And then it pulled back from that weekly trigger. You see what I'm saying? It gapped down just to come back up and fill it. So it ended up doing what she was talking about, the corrective activity.
Right.
Let me
Okay.
remove that. And then if you go back to the week, it does another creative corrective activity right here before pushing further. So if I mark right here, see where that was on the month. So boom, you see the monthly trigger to do the 2 down. It went above it just to do the 3 create. I keep saying corrective activity. So yeah, it happens. Sometimes there needs to be a pullback before it ends up going forward. So you see it triggered it, came back, then did a 3. So it had a back-to-back outside week. So yeah, she's right.
Okay.
Push forward.
All right. And I know like you mentioned, you said a lot of times, was that because she was showing it on the monthly, why you don't always have to jump right in because it's such a bigger trigger then?
Yep. because there's
All
always
right.
going to need to be some pullback. You know what I'm saying? Because like just like when you see it like on the daily or the weekly, your
Yeah.
TTO or corrective activity may happen on your 5-minute time frame, might happen on your 15-minute. For NUE, it ended up happening on like the 1 hour.
Mhm.
So that week when it was dumping, it was the daily. Where was it at? So where was that on that day? When was that when NUE was just dumping like crazy? It happened on the hour. That's where it was. So like right here, it was having the corrective activity on the hour. TTO to the upside, knock these people out their position, then back to the downside, trade sideways, down, knock some people out real quick. And like that 5-minute candle, this happened like 5 minute or on a 1-minute candle, and then back to the downside. So it always needs to be corrective activity. You don't always have to be the first in. Sometimes it never looks back, but then sometimes there is corrective activity, especially on something that's trying to take out the all-time highs, like you saw with crowd.
Right. All right,
So
cool. Thank you, bro.
yeah, I just never noticed it that it was that 122. Like for instance, right here on crowd, it did some corrective activity here before going
Mhm.
back up. But that YOLO, I had everybody do that Monday to Tuesday. This was the corrective activity right here. This 2 down, then exploding back up. So when you have that new low out of nowhere, that's the corrective activity. Takes out 2 pivots, then back to the upside.
Right. All right, cool. Appreciate you, man.
No problem, bro. My bad.
Nvidia looks so strong on the weekly chart.
Some questions. Let's see. If I'm looking at a weekly expiring options, what stock chart should I look at, the daily or the weekly? Look at the daily.
Mm-hmm.
I'm using Thinkorswim. This is Thinkorswim. That's why I tell y'all I recommend Thinkorswim. Powerful chart for the people using the strat. You can upload it in here. You can trade from Thinkorswim. You can scan for your strat plays in here, and then you can analyze your contracts, which I will see a lot of on the trade ideas. Me picking a contract, sitting over here to analyze it. What's my risk to reward? If it hits in a certain amount of time, what it look like? So yeah. So we got time for like 2 more questions if anybody has any. If
I
not,
wanted to say
hold on.
something really quick because I think, hold on, wait, can y'all hear me first and foremost?
Yeah, we can hear you.
Okay.
Speak
I
up
wanted,
some though.
I wanted to say this. I know a lot of people, kind of struggle with what time frames to look at based upon like their plan to hold. So what I would say, just as like a little cheat sheet in your head, like let's say you're looking at holding something that's a weekly, then take a step down. Like always take a step down. So if you're looking to hold something monthly, well, what's your next option? When it comes to how you should look at it, it would be the weekly. If you're looking at the weekly, take a step down. That's going to be the daily. If you're looking at swing trading, that's holding within the day. So if you take a step down, you're looking at the 4 hours, or you might, want to trade smaller time frames. So if you're planning to hold for maybe 30 minutes, then take another step down. Maybe look at the 15 for your entry. So hopefully that makes sense to you guys, like how to gauge your entries. I plan on holding for a month. I'm probably going to enter off the week, or you can scale down even smaller, but that's like just a cheat sheet. Just take a step down. Does that make sense to y'all? Give me a 5. That's my magic number. Ray, did that make sense to you?
3 makes more sense. All right. Jeffrey,
You steal my joy.
Rugon, you can go ahead and ask your question.
Yeah, what's going on, squad? Rand K. Appreciate all that y'all do. So I was going to, I guess my question is, like, I'm finding out I'm a strat, I'm using a strat, I'm pretty new. Sometimes that you don't always hit your target. You may get like the halfway through, for example, on a weekly, you may get halfway through and hit and not reach your target, but you'll pull back. So sometimes I find myself, I'll get like maybe 15, maybe 20%, and then it'll pull back, and then a day later I find myself in the red. So and especially when you trade in small amounts like that 15% may be $15. So like mentally you're looking at it, you're like, it's only 15. I'm gonna try to hold out and get my target. So do you guys normally just go ahead and take that 20%? Because I know Ray It was either earlier this week. It was something that you called out and I traded, and you mentioned he's like, yeah, you could have played the reversal as well and played puts down, you know, on the same thing. So like, you know, is that what you kind of do with your strategy? Do you just you know, maybe do you hold through that corrective activity, or do you take it 20%, run the puts, and you know, that way, or what? I'm just trying to kind of get a you know, better my strategy.
You can go ahead and take the 20% because you won't be able to tell a corrective activity versus like actually just flipping and going to the downside on you. So if you see it reverse on you, you can go ahead and play the puts, hop out that position, and then once it go back to the upside, if it go back to the upside, reverse and go and hit the calls.
And jump back in. Gotcha.
To the gentleman that just asked the question, I would also encourage you to look up a YouTube video that helps you to understand the differences between like a retracement or an actual reversal. So reversals versus retracements, because stocks are going to have like little small retracements and then they'll continue to, you know, go into the direction that they were going in. But you're also going to have those reversals. So it's good to know the difference between the two. Right,
You got that, bro?
Yep, got it. We'll do, K. I'll look into that.
no problem. I think it's actually a video out there that's on YouTube that's called retracements versus
Reverses. Okay.
yeah.
Yeah. Thank you.
No
You're
problem.
welcome. And then D-New, and then this will be the last question.
Somebody asked how to play earnings. Let me put this in here.
D-New,
D-New. You on the mic with K and Ray.
welcome to the K and Ray Morning Show. The strat resources, go to Market Facts resources, click right here, scroll down, the strat resources doc, click on that. Boom, it'll pop up. And then also K's strat cheat sheet guide. And then boom,
That's your favorite thing to say. Boom.
boom. You never know.
Boom.
Anyways, all right. So
Hold on, Ray. Let me answer this one person.
Oh, go ahead.
They're asking what it means to basically play earnings. So playing earnings basically means like all publicly traded companies are required to report their financial information once every quarter. So what they do is once they report their earnings, that information gets revealed to all of the stakeholders. They're going to report things like earnings per share, sales revenue, the future outlook of the company, and things like that. So typically when they do that, there's a lot of speculation around whether or not the company is going to report good earnings or bad earnings, or, you know, maybe you've seen all these companies popping up everywhere and you think like there must be money being made by this company or this place is popping up everywhere. So what traders typically like to do is they like to play whichever side they think that the stock is going to do, right? So if you think the company is going to run, a lot of people try to buy in prior to earnings. And then, of course, the company reports earnings. Now, the thing about that is a lot of companies report earnings during times where we can't trade. So you might have companies reporting earnings after hours. You might have companies reporting earnings before the market opens. And, you know, if they miss the earnings and you are in a call, then 9 times out of 10, when the market opens, you're probably going to be in the red. So a lot of times this is why we say we try to stay away from trading earnings, because you never know. Sometimes the run up is already factored in. Sometimes it's a delayed reaction to earnings, even if it's good earnings. Sometimes, I know you've seen it before, Ray, I know I have, but they could report good earnings and they could still fall. You know what I mean? So you just have to, when you're trading earnings, you want to look at historical data to see what the company normally does around earnings, so that you have a higher probability, but that's not 100% either. So that's, you know, my answer for how to play earnings. And then also there's a calendar on Earnings Whispers and Options Swing, and you can get that just by Googling or off of Twitter or Instagram. So Earnings Whispers and Options Swing, and I'll put that in a chat too.
TTO is triangle day out. It's a corrective activity. Basically, like right here, it forms like a triangle, but I will find a better example real quick. And then D knew I asked, try to figure out, like, type your question in the chat. I'm gonna try to get you to unmute again, but let me clear this drawing set. So right here, you see price went up, it comes down, it does a TTO. If I mark this right here, this forms, it's an ugly triangle, but it's a triangle. So boom, triangle, they out, take these out to the downside, then comes up and take these people who are short out. So if I mark here and over, boom, so you got a triangle right here, and then a ugly triangle right there. That's all the triangle day out is. It's a pullback just to keep going in that direction. Which on crowd, I think this was that three right there. Boom. See? Triangle, boom, come back to the upside. So triangle day out, corrective activity. It's just a funny way of saying triangle day out because they out, not us, basically. Like it got them, but not us. It would be next week is July 4th. The week after that would be, you know what I'm saying, the next time we have like an actual class and stuff like that. We like to put Q&As in there just for the people who want to have their questions answered. But there's plenty of videos in Wealth Squad University and in Market Facts Resources. What you got, D-New?
Ray K. Hunt, thank you again for being here. Appreciate it.
Thank you.
Quick question. How do you guys tend to play the open? Do you play the open, play the pop at the open? A lot of times things pop up and then pull back heavily, and sometimes they go back, sometimes they just drop off. So I was wondering if you stay away from the openings or do you play the open?
Sometimes it's good to either wait 30 minutes to an hour. The strategists will tell you an hour. Some people just say after the first 30 minutes of the market.
Yeah. I play the first, I play after the first 30. Because if you're trading like an orb strategy, like some people trade orbs. At one point I was very successful with playing after the first 15, but I just stopped after the first 30. That's when people kind of slow down from taking profit. If you notice, like in the morning, a lot of times if you're into contracts already, you'll see like that you're extremely up and then the volatility comes in and you see that money just starts to go away. Normally in the morning, a lot of people are taking, right, and then it kind of settles after that, and then you can get like a clear direction almost of what's going on.
Okay, so you hold for about 15 to 30 and then check the charts and see which way it's going, see if there's a reversal.
Yeah, I would hold off for 30 instead of 15. I mean, I was successful with 15, but I would hold off for 30. I've had higher success holding off until after 30.
Right, because I've gotten beat up in the open, playing the open, exactly what you said. I'd be up 11, 12%. Like the other day, my phone froze up. And by the time I restarted it, I was down like 20. I was like, whoa.
Yeah, because think of it. If everything is at the top in the morning, right? Because people are able to purchase shares before we're able to get into options contracts. So if everything is at the top first thing in the morning and then people start pulling out, but you decide to enter something when it's at the top, when people start pulling out their money, that instantly means that you overpaid. Does that make sense?
Exactly.
Okay. All right, great.
Yeah, definitely, because you'll see like 2 hours later, if you're still in a play, the options price will be maybe half the price if you hold on too long.
Exactly.
Yeah. Okay, that makes sense. And then this is unrelated, but do you guys know how to trade the pre-market? Is there a certain status you have to be, or?
You can't. We can't. Yeah.
We can't. Gotcha. Okay, that was it.
Okay.
Appreciate it.
No problem. All right, and then, hey, what happened to the other person? All right, well, Edward, you'll be the last person. What you got?
Yeah, thanks for taking my call again. I wanted to know, do you do a limit order on all of your options? Do you recommend that?
Yeah, I do
Sometime.
limit orders.
Okay.
Okay.
Right.
Huh?
You be so straight to the yeah. I do limit orders.
Because I do limit
Our
orders.
me and Ray's dynamic is like he's so chill and so laid back. He's gonna give you his answer, but he ain't gonna say much more. I'm always like, let me dig super deep so that you leave knowing why. I love you, Ray Ray. But yeah, just think of it like grocery shopping or shopping for whatever that you shop for. You want to get the best deal for your money, you know. And I told people in the community here recently, always look at your contract, like go into the details of your contract and see what the high and the low for that contract was, you know, and try to bid somewhere in the middle, because obviously you don't want to overpay for a contract that might end up reversing. So now you're hit two times. You overpaid and it reversed. So you always want to do a limit because you want to say, hey, this is what I'm willing to pay to enter this contract and no more. And if you miss the trade, you just missed the trade, but at least you're not chasing something at the top. So limit orders are great unless you just know that the momentum is so strong that you're going to make profit and you don't care. You're just going to enter the contract at the market price or whatever the ask is. But in most cases, you want to do a limit.
Thank you so much. I appreciate it.
No problem.
Ray, we the dynamic duo.
First of all, I ain't even gonna say it. But yeah. So inside time frame. Inside time frames, I don't know what you mean by inside time frames. You probably mean inside candles, as far as like candles that are, where is it at? A1, like right here. But those are our actionable signals because it's a consolidation. It's usually a tight range. Like for instance, what's one of these that was a tight one? Then I'll leave y'all with this game right here. I want to say, boom, here we go. Airbnb, inside month, tight consolidation. As you can see, it doesn't take out the high or the low of the previous candle. So it's an inside candle. And normally, if you look at this gray part right here, high H and L, it'll say the high and low of this candle was 129.71 to 173.44, which is like probably like $44 almost, maybe 40, 43 and some cents. And then you look at even this one right here, it was the high and low was about $30. Besides this candle right here, this inside month for Airbnb that we're in right now, it's only moved $13 compared to like the previous ranges that it moved. So it's a super tight consolidation. That's why we look at ones, why their ones are important, because we know that they're consolidation, and the move afterward usually is going to either explode to the upside or to the downside. So that's why inside candles are important.
Yeah.
But I'm gonna catch y'all. Hope y'all, enjoyed this Q&A. If you have any further questions that you need answered, feel free to DM me. I'll get back to you as soon as possible. All right. I don't know if I'm going live today. We'll see how my stomach feeling. But anyways, so check this out. Holla at y'all. Peace out.
Wait. You're not even gonna let me say bye to everybody. You're so rude. All right, everybody, y'all have a good day. That's all I got.
Bye, Kay.